All right, trade recap here for March the 21st, 2025, the Friday. So the one trade that I did take, I posted a video about it earlier, RNAZ. So the reason why I like this trade, very abnormal, had a float of under 1 million shares. And by the end of the day, I traded 600,000 individual trades. Now, the one thing, it did have a bit of a gap, 31%. Which is fine. You know, gaps are good. You don't want it to gap up like too much and then fade from the open, but this was okay. Now, I think the trade on it was maybe at the start of the day, but this was a bit of volatility, so I didn't really like that too much, and your risk to reward lines are quite wide. So what I like to do is called a pullback play. So you want strong volume coming into the stock. If it has a good longer term chart, that's even better. So you want your initial move up and then your pullback. So I think the one thing I did wrong on this one is right here. I bought it, I think, on around this candle. It worked a little bit, got up to about like 1R, and then ended up failing. I think I had my stop at about $1.15. So I sold down there, which was the right thing to do because like in the post market, it went like quite a bit lower. So I took the loss, which was the right thing to do. But I think this wasn't really that good of a quality. It could have pulled back a bit more, built some rising bottoms, broke with a strong candle. I'll show you like a really good example of what I'm looking for. And maybe another thing, I'll just pull up the daily chart here on it. Very hard to see because the scale gets skewed, but this was Friday. So think about, a lot of trading is about psychology. So if you think all these people that bought it back here, you know, this is over the last, say, 2-3 weeks. If you own this stock and then all of a sudden on Friday you see the stock up, you know, 30, 40, 50, 100%, you're going to want to sell. So what a lot of people do is like they bought this, like I can finally get out of this stock, and they're going to sell into the strength. So you need a lot of volume to overcome that. And it did have a lot of volume. So I think it was a good one to consider, but I think the pattern wasn't the best. But anyways, you're not going to be perfect. So took that one. That was a loss. Two other trades that I found, unfortunately, I didn't take, but I thought were good. I'll look at this first one here, NAK. This is a better example of a pullback play, a better quality pullback play. So again, here's your daily chart. There's the strong volume. I always want to see a strong volume on the day that I'm going to take it. Either initial first day strong volume or a break of a pullback in a good swing pattern. I'll show you an example of that right away here. This is kind of like your first day abnormal stock. It's been building a good pattern for a few months. So go back to the 2-minute chart here. This is a 2-minute. The 1 minute looked very similar. I like to take it on the 2 or the 1. So here's a better example. Here's the volume that comes in. It goes straight up. You don't want to chase it up here, right? That's when all the emotional people are buying it. You want to wait for some profit taking. People start doubting the stock. And then you want to wait for that sign of strength that it's starting to reverse. And this was a nice 2-point inflection point trend line break with a strong candle. That's what that white dot on that candle means. All that is just a statistically strong price candle. So it's breaking this pullback. So if you bought that, you put your stop below the last inflection point, somewhere down here, and it worked quite well. And it went up to, this is 1R, 2, 3, about 3.5R. Now, that could have been a potential sell on a bursting bubble if you want to be aggressive, because it was quite far. Look at this distance, but like above the trend line. That means it's getting emotional. That's getting emotional, and usually that means a correction. Doesn't mean it's always going to happen, but a correction could potentially happen, and that's what it did. So it did correct, but it never broke the linear trend line. So that's an aggressive sell there for 3.5R. Or you could potentially, if you want to be more conservative, another sell was right here, break down from a falling top, and that got you out pretty much at the same price. You're looking at about 3.5R for every 1R wrist. And then it closed the day around 4R. So if you waited till end of the day, sell. That's another method. But, you know, sometimes you'll see these stocks break the trend line, give back all their profits, go into a negative, right? So you kind of want to take the sell signal when it gives you the sell signal. You don't want to like hope for a bigger winner because that's doesn't happen all the time. But anyway, so that's a 3.5R trade winner, and the other one was on this LAZR. Here's a good example of a swing continuation. So there's your daily chart. Let me just load up the 13-minute chart right here. You can use a 13, a 15-minute, 30 minutes. You know, they all kind of do something similar. So here was your initial swing entry on the 17th. That was, see the volume coming in there from a nice pattern break. So the reason why I was watching it there on Friday is because it was making a continuation pullback break. This is a pullback break just on a longer time frame. And then you see the volume coming in. So people are getting excited about the stock again. So this is like nice upward momentum. This is a good example of like a swing continuation. So then if you dial it back in down on a shorter time frame, we'll go to the 2-minute here. So here's your 2-minute. So then you can see the volume coming in on the morning. That's what kind of gets my attention. It gets on my list. This right here, potential entry, lower quality. The reason why it was lower quality because it wasn't quite breaking a 2-point inflection trend line. I liked it a lot better right here. It built some rising bottoms, so buyers are starting to take control of the stock, building optimism, breaks out, strong candle, set your support below this inflection point, and it goes up to about 1 hour, you know, goes sideways for about an hour, has another breakout. That's a potential ascending triangle break. So that's another potential entry or a scale in. Goes up, goes up, goes up. Never makes any falling tops. Doesn't really break this upward trend line. You can see here I have the 10 period moving average. It respected that the whole way up. So I think this one you probably just would have held it into the close. So this was good for 1, 2, 3, 4. 4R on LAZR. NAK was about a, what did I say, 3R win. So this is a 4, that's 7. And let's say you did take the RNAZ, that's a minus 1.5. So if you took all 3 trades, that's a total profit of 5.5R. So for every $100 risked, you would have made $550. A little bit of slippage, so you can call it about 5R. So that's $500 for every $100 risked. If you risked $500, that's $2,500 profit. And that's what trading is. Like, you're going to be right. Maybe I'm only right half the time, 55% of the time. But if you let your winners run, which is hard to do, you got to overcome your human natural instinct to like just take quick profit, but you also cut your losses when you get a reason to cut them. You have to be comfortable with that risk amount. You can only be right 50% of the time and still do well and still make money and be profitable. And here's just a good example. So yeah, that was Friday. If you guys have any questions or comments, just leave them down below and I'll be happy to answer them.